So a key concern right now in terms of global growth is the cost of oil. Friction with Iran is raising fears of disruption to supplies and sending the price of benchmark crudes like Brent and TAP is soaring. And rising energy costs threaten to slow the economies that have growth and potentially derail those who are struggling. Here's Simon Palin.
As the Eurozone stumbles, emerging economies like China, India and Britain continue to run full steam ahead. Thriving development in those countries has brought a seemingly insatiable appetite for oil.
Those economies continue to grow, and whilst they grow, that demand will always be there.
But the rising demand for oil comes as tensions in the Middle East curbs supply.
This stalemate occurring between Iran, Israel and the States and the embargoes of oil is creating a whole new dynamics in the price of oil.
Divisions over Iran's nuclear program have helped send the oil price to 10-month highs. Some analysts expect the TAP's price to once again hit a record of $153 a barrel within months. It's heaping pressure on petrol prices and casting a fresh pall over the global economic recovery.
I think if you see the oil price continue to be at these sort of sustained levels, it can have huge ramifications for a recovery for economies across the globe, particularly in the US.
Some say the oil price poses an even graver threat to the global economy than concerns over a Greek default.
A 15% price increase in the price of a primary such as oil will have some inflationary effects down the track. Now that will obviously see interest rates start to jack higher, puts a further crimp. So it's really not in any recovery's modus operandi to see the price of oil higher.
Rising prices have already squeezed profits at Australia's biggest petrol retailer, and there are fears global equity markets could soon take a hit.
It couldn't see markets actually take a step back from where we are. So that's something I think investors, analysts haven't really priced in just yet.
And it's also something the global economy could easily do without.